Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, June the 5th. The year's 2024. Let's talk trading. Process versus outcome, part 2. As always, these videos are for educational purposes only. Your results may differ from mine. Yesterday, I started talking about process versus outcome. And I thought about it after I made the video. And there's something else I think we need to look at. And that's really what you do and what you think about after the trade, after you exit the trade. If you focus on the results, in other words, how much you made or lost, then you are really focused on the outcome. Because, see, a lot of times when you enter the trade, you're thinking about the outcome. And so, when you look back, if you're looking back and you're counting your money or you're licking your wounds from the loss, you are just so focused on the outcome. And what that's probably going to make you do is you're going to look to change the process. Maybe you're going to add some new indicator that everybody's hot on. Oh, been there, done that. Maybe you're going to look for an entirely new method. But you see, if you're focused on the process, you're going to look at what you did as a trader. Did you do everything before the trade you were supposed to do? During the trade, were you paying attention? Were you fully engaged in the process? Or were you distracted, reading emails or watching videos or Instagram or TikTok or some of that other stuff that's out there in social media? And did you follow all the steps of your process? And that's really the difference that makes the difference. I may have talked about that. I think it's probably been over a year since I've talked about the difference that makes the difference. Well, that's one of those differences. And it's really crucial and key because it's going to determine, what you do on the next trade. So if there was something you forgot to do in the process on your next trade, then you're going to be focused to make sure you do it. As opposed to, if you made money on the trade, on your last trade, you might get a little lazy because you're just thinking about the money. You're not thinking about the process. And I know it's difficult. I really do, because of the way our brains work. And it's something that you have to practice. And by practice, it's something you do every trade. I'm not talking about getting a practice account with play money. No, I'm talking about actually putting it into practice. That's the thing about the word practice. I mean, doctors practice medicine. But if you're on a team sport or you're in a band, if it's not game time or it's not a gig, when you get together, you practice your songs or your plays, right? So you have to think what that word practice means. It's crucial. So let's look at our charts here and see what's going on with the pound and the rest. We had some red news. The ADP numbers came out. And for the month, we are right on the edge of the wick zone, the monthly wick zone there. All gaps have filled, and we are in the upper wick zone of the previous week. We've actually broken it once. On the daily, you can see once again we came down and we touched, or almost touched, missed it by 0.2, the high of the first day of the year. And so We're in the body of the previous day's candle right now. And you can see we opened in the lower wick zone and then shot up out of it. For the year, 79 pips above the open. $103 off the high and $492 off the low. And once again, we came down and looks like we almost touched the high of that monthly inside bar from 5 months ago. We don't have much daily inside bar action today. We've got a handful on the week and a couple of handfuls on the month, it looks like. You know what's really interesting? I talked about red news and we only have 35 pip range. That's almost unheard of. And so obviously something's up in the markets. The yen pairs, I guess maybe everybody's trading the yen pairs. Look at those ranges. Bank of Japan must have done something. Take a quick look here. At the yen chart. I think this was the day I talked about shorting, looking for a short on the yen. Or might have, let's see, or might have been here. I can't remember, one of those days. But if you were watching my videos, you heard me say look for a short on the yen. And then you can see here, you know, the charts tell a story. And buyers said, you know, this is a good deal down here. And what happened today? They still thought it was a good deal. But once again, like, there could have been some type of bank intervention. I have not been following the yen news, so I don't know. And once again, you know, looking at these charts, we got the buy zone here. You can see really wasn't any short triggers. We had some buy triggers go off. And then if you look over here to the left, you see price is doing the same thing. And so you can see here on this high, we didn't break that high. Then we came down, so we went through the previous M30 high, and then you see over here we fell below this high, and we started falling below these highs. We just fell below this high. The price is going down. So if you're analyzing the charts and you're looking for trades, I mean, once again, what's your plan? What's your method? What's your process? And so this is something I call top scraping and bottom scraping. When you look on the chart and you see price starting to fall, you know, back through highs or rise up through previous lows. And a lot of times, you know, those trades are good for a couple of pips or more. And once again, what's your process? Are you just trying to get 2 or 3 pips a trade in and out quick? Or are you looking for a long-term type of trade? That's up to you. I can't really say what you should do. Range is too low. It's like not even thinking about the buy zone, even though we just went through a red rat reversal there. But the range is way too low. And you can see the difference between the smart rat here and the regular rat. And then the smart rat here and the regular rat. It's, prices are crisscrossing. As you can see here, there's your short and there's your long. So that's one of the reasons why the range sets not large enough trading the original rat. Smart rat, there is about a 6 pip difference between the triggers. Bambino Flex Indicator said go long. Pivot Trading Plan said go short near the pivot, and that actually paid off a couple of times. Last time, not so much. Haven't even been near R1, and we have not been near S1. Once again, with the teeny tiny daily range, not much action. We took out today's pivot. We still have 2 missed pivots from May. On the week, we've taken out the pivot, but we've missed the monthly pivot by 32 pips so far. As I mentioned earlier, in and out the previous day's lower wick zone. We're at the bottom of the hour, just so you know. Nowhere near the ATR zones. I know I haven't talked much about the ATR zones, mainly because price just isn't doing anything there. It's really not. Let's see. Got the last week's high. We're off by 8 pips. Previous day's midpoint, you can see we've crossed that. And we just broke out of a flip-flop. Box would have been good for 2 pips. You can see here it was at the bottom of that range. Looking at the fibs, you can see we put in a 3 ball, and then we went all the way up to what, the 70. I forget which this one is. Pivot, and that's the 50, that's the 61, so I know that's the 90. I forget which this one is, 70 something. So, fellow traders, that went by quick. The fastest 15 minutes in trading is almost over. So once again, on that, process versus outcome, if you're looking at the results, you are focused on the outcome. when you should be making sure you went down your trading plan, trading checklist, and ticked off all the boxes, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.